It may seem difficult at first, but everything is difficult at first. Master swordsman Miyamoto Musashi. My friends, don't worry about how hard or complicated this might be or how much you stink at doing it to begin with. Stay at it. It gets easier, it gets more intuitive. The more you practice and the longer you do it, 10 to 15 minutes each and every day, I tell you, don't worry about how long this will take you. If you start today, you will finish a day sooner. And when you master the charts, you'll make up for all the time you ever spent. It is one of the most worthwhile things you can do regarding your finances. There's nothing like being able to read the charts. Now, let's go ahead and jump into the S&P 500. As we start, of course, this is how you update a trend line. Just that way, we cannot connect three, so we're going to connect the latest two. And immediately, what do we look at? We see where the high was last week, 594.50. Where are we now? 595.54. It's hard to see here. That's why you don't let the opaqueness of it fool you. You go ahead and check the numbers. Remember, the highs are right here, as is the open, as is the close, as is the low. So again, always check, are we moving higher on day one? Yes, we are. Look down here on the half day. You can see markets were in a little bit of a confusion in the morning. We got a doji, then moved up in the afternoon just barely, closing at 0.11%. You can see things higher on the 2-day. This represents Friday and Monday, means it just closed. Check out the volume on all these charts. Decent volume on the half day, low volume since we closed now. We've stayed about where we have been for the last 6 days since these are 2-day candles. We haven't been above average. Have to go all the way back to the 9th and 10th of April before we had any above average movement. Same, look at this. We go all the way back to the week beginning the 7th, which of course encompassed the 9th and 10th of April, the 7th of April. Again, when we had those two huge down moving candles. What were those? When Trump announced the worldwide tariffs on just about everybody on the planet. Then things slid sideways and then started moving up. Where does that end us? Now that I've given you some in-depth as to what I look at, what I see as we look at our trade execution summary grid for Tuesday, the 20th of May, we are still at 70% bullish on the S&P 500. That's what we were on Friday. We're at a 75% back test accuracy. Our entry point is at 593.50. We closed at 594.54. We see about $3.50 of up movement till we hit some resistance. That is 597 is where we expect to see that resistance. Now let me give you what the confirmation signals are for jumping in. That is 2 consecutive green Heikin Ashi candlesticks, 195-minute chart aligning with the 1 week and 2-day uptrend. And of course, you're looking for decent volume in those. You got one at the end of the day, didn't you? So keep watching. Now again, if you've been in this trade since we saw things turn around, you of course are still in it. Let's move on to the NASDAQ 100. Very similar things when it comes to volume on all, just sort of repeating what we saw on the S&P. Got to go all the way back to the week of the 7th of April before we had any above average volume. Haven't had it yet, haven't even had average volume. Things moving up. Where are we on the high from last week? That was 521.93. This week, 522.53. So we are moving up 0.10% for the day. Again, don't forget we saw some of that volatility in the morning, and then we ended the day with a green up candle, decent volume. Not on the 2-day, didn't even hit average again, but we had decent volume on the half day. Now, let's talk about what our confirmation signals are. Pretty similar to what we see on the S&P 500, green Heikin Ashi candles with a higher low than the 195-minute chart supported by the 1 and 2-day trends. So again, we're looking to see this market continue to move on up and again to give us supporting volume and price movement. So that is where we are as we continue to move forward. Now let's continue to move on. We're going to now transition over to our, I knew I was leaving something out. We are not as positive on the NASDAQ as we are on the S&P, 65% bullish. We were the same on Friday with a 70% back test accuracy. But again, things are moving in the right direction. Now we're going to get to some bearishness. The 20-year U.S. government bonds, they did move in the direction that we predicted. 80% down move is where we were on Friday. This is where we are today. That was Friday going into Monday. We're still at 80%. We see the entry point is at $86. The exit where we hit some resistance is at $84.50. That's $1.50 down move. And of course, an 85% back test accuracy. So we continue to see bonds moving down. They were down right at 0.29% today. Things moving in the right direction. How do we want to get into that? Well, our confirmation signal is 2 consecutive red Heikin-Ashi candlesticks on the 195-minute chart, aligning with what? The weekly and the 2-day trend. Now, again, you can see we've got a doji right here, just about a doji, because we had that day and a half of up movement. Then we had things slowing down on Friday afternoon and then hammering down in the morning on Monday and recovering a little bit in the afternoon. We're going to need to see red candles confirming continued down movement. Although this indecision here on the 2-day chart, that could throw a wrench in things. So we will keep an eye. But if you look, you see where we had the big drop starting back there on the week beginning the 7th of April. And on this half-day chart, hammering down till we got to Monday the 14th, where it was up through Wednesday the 16th, then back down, then pulled up, then back down, up a little bit, down, up a little bit. So again, you can see as we've moved through this, you can see it played out on the weekly chart, how we had all that downward pressure, tried to recover that week the 28th, and then started to roll back over. That's why we are still negative. We are still bearish on 20-year U.S. government bonds. Remember, inverse fund for that, TBF, Tango, Bravo, Foxtrot. Now, let's go to gold. Gold rebounding 1.29%. We told you that we were barely bearish on that on Friday, 60%. We remain at 60% with a 70% back test accuracy. We can see where, gold hit its high of highs back on the 21st, that week beginning the 21st of April. Then a doji, then an attempt to up move and a fail down last week. This week, starting off with a red Heikin-Ashi candlestick. Lots of volume last week. Those 2 prior weeks hadn't had it, but it had it on the high going back to the 21st of April, the week beginning then. You can look at the 2-day chart and see, again, we haven't hit average or above average volume since the 22nd and 23rd of April. We look at this half-day chart, you can see on it where things were up in the morning and the afternoon after being down on Friday, up on Thursday, and then down starting on Wednesday the 7th, the sideways slide on Friday and Monday morning of last week, and then down again until we had that punch up on Thursday and down on Friday, and then punching up this Monday. So where does that leave us? Well, look at if you're going negative on gold, then of course you want to look at a stop loss somewhere around the 299 mark. We're already at 298.03. So if it hits up there, again, be careful. The confirmation signal is red Heikin-Ashi candle on the 195-minute chart, with the 2-day showing a lack of strong bullish momentum. So keep your eye on things, and let's again just watch and see if indeed we're going to have things blow off that upward energy and head back down in gold. Lastly, we'll take a look at HODL. Now, where have we been on HODL? We were at 65% bullish on Friday. We remain that way. The backtest accuracy at 70% remains that way. Again, 65% bullish is a little more than a coin toss. And of course, what did it do? Well, it rewarded that. It was up. Been hard to see though, because of course, as we look, we saw things starting to move up on Thursday afternoon and Friday. Then we had lots. Let's zoom in on that. You can see, look at that crazy looking candle. There's really no candle there. You can just barely see a doji right there in the center of that long wick on top and bottom. That's where we are in the morning on Monday. And then a nice green up candle in the afternoon. So again, jumping in and writing that, little difficult, we will admit. So where does that leave us? Well, we've got a confirmation signal is going to be green Heikin-Ashi candlesticks with higher low on the 195-minute chart supported by the weekly uptrend. So again, be watching for that as we continue along. You know, we do see things moving in the right direction, but of course, you don't want to catch a falling knife. You want to catch it at the wrong time. So again, we've got one nice up candle. See if things continue to move up. And of course, be very careful as we start hitting up on this high of highs. And of course, we're going to look at now at the 24-hour a day chart. This is by Bitstamp. And of course, we see where Bitcoin hit the high of highs, 109,356. Where are we now in comparison to that? A high today of 107,115. So again, not too far away. We'll keep our eye on things and hopefully just see Bitcoin keep on moving. Has this just not been beautiful when it turned over? Just this constant green up candles. Now, what happens when Bitcoin hits prior highs? Well, that might be a signal to take some profits and you see it roll back down. Or if it's enthused, it may just climb to higher. You never know with Bitcoin, my friends. That's why you got to follow the charts. God bless. All the best from the whole team at Charting Wealth.